Hey guys, it's Tom here from the WB Trading team, and today we're going to talk about market correlation. What is it? What does it mean? And more importantly, how does it affect us as traders? You might have heard from traders before, avoid correlation, take advantage of correlation, all these different pieces of advice. We're going to try and talk about what it actually means. Can we see it? How do we assess correlation? And then we're going to look at what should we do about it. So yeah, with that being said, guys, let's get started on today's video. Just very quickly before we dive in, if you're still struggling with your trading or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that will map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. So let's just start with the simplest question, which is, what is market correlation? What do we mean? So whether we're looking at forex markets, crypto, kind of most market sectors, what we're talking about there is identifying markets that move in the same direction. So kind of move in parallel almost. And also when we talk about negative correlation, we're talking about markets that kind of move in opposite directions to each other. And this is a measure of how often they do it, how closely they move together, and we can see this in a number of different ways. So first, we're going to have a look at, you can find this online in quite a few places. I'm going to look at one of the tables from a website called MyFXBook, and we're going to have a look at kind of the numbers and how people define correlation in terms of percentages. So I'm here on MyFXBook. It's a great website in general for quite a lot of forex studies, but we're going to look at the correlation tracker here. So if you go to market on their homepage, go down to correlation, this is what you'll get. And when we're having a look through this, as it states here, the correlation ranges from minus 100%, which is complete negative correlation, all the way through to 100%, which is complete positive. So they've basically just got a table of currency pairs against each other. And as you can see here, Australian dollar, Canadian dollar is obviously going to be 100% correlated with itself. And then as we go along the line, you're going to expect to see the ones with the Aussie dollar should be kind of highly correlated. So, we can see here, Aussie dollar, New Zealand dollar, 64% correlation. The reverse, well, not the reverse, but reversing a pair there, Euro, Aussie dollar is negative correlation there, which we'd expect, obviously. And as you go down, you can see that there are some surprises in there. So, for example, Euro USD, that's quite a high level of correlation, 86.7%. We're on the daily time frame here, I should point out, and one thing we can always have a look at is how do markets correlate on different time frames. So if we drop down to say the 5-minute chart, you'll see that a few of these change around, and some of them get really high levels of correlation. As you can see now, we're at 90% for Euro USD, and as you move around, maybe go up to the monthly chart, for example, that drops down a little bit. So you can see, obviously, on the lower time frames, the correlation tends to be a bit stronger. And we can do this for all these pairs. There's quite a lot of pairs on here to look down, and you can change things around. You can select an awful lot of symbols there if you wanted to check. There's a lot of detail in here. And it's really good to kind of get a first glance at where we think correlation might exist or where we think negative correlation might exist. But it only goes so far. And yeah, you can use the filters, find some that are really highly correlated. But what about looking at this visually as well? How can we assess correlation as what's happening on the actual chart? So let's have a look at an example now of looking at a broker's chart or a couple of charts and seeing where the correlation lies there. So here we are on TradingView now. One of the great things about TradingView is that you can kind of layer charts on top of each other in a fairly clear way, as clear as possible anyway. So we're on Aussie dollar here, and we're on the daily chart. I'm going to add in a highly correlating pair, which is Euro USD, to see how kind of visually it compares. So if you're on TradingView, you can go up to here, compare or add symbol, and I'm going to add in Euro USD. So same scale, same, etc. We'll add this in, and then you can see that now an orange line has appeared, which represents Euro USD. So overall, if we're looking over the last year, okay, there are bits where it doesn't line up exactly, which we would expect, but the general trend movements and the peaks and the troughs in the market are fairly closely aligned here. You would say that just visually, without putting a percentage against it or anything, we're seeing quite high levels of correlation here. And, this gives us an idea, okay, yeah, we can kind of track if one's maybe lagging. We'll come on to this in a second. Or, one's following. Can we take advantage of this? But let's have a look at the other way around and see visually what it looks like if we've got a market that isn't correlating as much. So I'm going to add in GBP JPY here and put this in. And you can now see that the blue line, which is GBP JPY, doesn't really correlate at all with the other two pairs. It's completely different. There are times when it's close, but what we're looking for there is, the same peaks, the same troughs, the same trend moves. And you can see there's really no correlation for most of the year there at all. So that's telling us that, we couldn't really use one of these currency pairs to predict where the other one would go if we're using pound yen against Aussie dollar, for example. So it's important to make sure that we do that visual check. We just make sure that what we're looking at in terms of a correlating pair against another pair is actually moving in the same direction consistently. And this will be the same on all time frames. So what are we looking for when we're looking to take advantage of market correlation? Now, this is a really detailed subject and it requires a lot of studying to go through and see consistently where we can take advantage of these kind of correlating pairs. But just as kind of a very intro 101 guide here. So I've got Aussie dollar and Euro dollar on the same chart. I've put them both as candlesticks. And okay, visually it might be a little bit confusing, but kind of the lighter candlesticks up here are Aussie dollar, the darker ones down here are Euro USD. And basically what we're seeing here is situations where maybe one is slightly lagging behind the other, and where we can get a signal to say, okay, could we get in here? Potential move for an uptrend or a downtrend, for example. So, one kind of area we could have a look at here is this move here. So we're going back to April here, obviously we're on the daily chart, so we're going back a long way, where we see the start of a move down on Euro USD here. So I'm looking at these candles here where we get this bearish run. At the moment on Aussie dollar up here, we're still in the top of this bullish trend up, and then it starts to reverse. So although there's not a lot of parity here, there's not a lot of correlation here, are we seeing the start of a downward trend on Euro USD, which is going to relate to what happens then on Aussie dollar? Okay, these kind of moves are higher risk, but you can see that the Aussie dollar is slightly lagging and then it starts to drop. And similar situation to when we get at the bottom of this trend here, and we see Aussie dollar turn around slightly quicker. We get a couple of fairly substantial bullish candles here and then the move up, whereas in Euro USD, we're still sort of hitting that bottom there and the market hasn't started to move back up. So there's areas like that. Again, this is very, very basic stuff. This is just quick analysis to kind of visually show you the type of things that we would look for. Now, while we're on the topic of taking these trades and looking at where the correlation could exist and how we could take advantage of it, one thing that we also have to make sure we focus on is don't take duplicate trades. What I mean by that is, if you in a situation where we're running out of margin, if you're unsure of what we're talking about by margin, I would suggest having a look at our video on margin as well to explain it in a little bit more detail. But in short, we're going to be running out of potential positions to take if we have too many open positions. Our broker will limit us. And so one thing that we can always do, if we're taking a particular strategy where we're trading it over a lot of currency pairs or a lot of stocks, for example, whatever, crypto markets, don't take duplicate trades. So if we're taking a trade on, say, Aussie dollar here, do we take the same one in Euro dollar? Well, it's almost the same move. So one of the arguments could be, let's not take the same trade twice because it takes up our margin, okay? Yeah, we both think they're going to go hopefully towards profit, but is it worth taking the same trade twice essentially? Because we're waiting for the same move because of this correlation. So when you're looking at margin and when you're factoring in, running out of potential open positions to place, this is a good factor in. Have a look at the setups that you're identifying and just visually check on the markets to say, am I just taking the same trade here? Am I just doing multiple basically trades on different pairs or different markets that are expecting the same moves that have been set up by the same kind of market price action? So it's always worth watching out for that. So correlation can work really well to our advantage, and also it can help us just identify those areas that we don't necessarily need to take trades on. So that was just a brief intro to what correlation is, how it impacts the markets, how we can observe and check for correlation, and also how we can take advantage and be wary of correlating markets. And the same thing would be true for reverse correlating markets. As I said, it's a really deep topic and it's worth going into in a lot of detail if you're looking at those type of setups and how to take advantage of it with your strategy. But yeah, just as an intro, it's worth keeping an eye on, definitely. Thank you always for watching. If you'd like to find out a little bit more about how we trade, how our strategies work, book a call in with one of our team. The links are in the description below. And thank you for watching. Look forward to seeing you on the next video, guys.